Happy October 2019 Investors Digest Market Update. Hope everybody's having a fantastic month and ready to finish this year out strong. So let's go ahead and get you up to date of what's going on in the San Antonio market so you can make those decisions as we're heading into what I consider the buying season for investors, because we like to buy this time of year so we can get them on the market for the next spring selling season. Get it to click through. There we go. So the number overview is for the August through October. So the average sales price here in San Antonio was $270,000, which was up 4.63% year over year. Remember, YOY means this time last year, how much higher has it increased. Median sales price, $223,200, which was a 6.3% increase year over year. So it's good to see we're starting to get into those above 5%. The last couple months it hasn't quite gotten that high. Total sales jumped a huge amount to 9.2% year over year to $2,725. Average rental price jumped 3.2%, which is fantastic to see because last month, if you remember, the rental rate was flat and we're sitting at $1,501 for this month. So good to see that number to jump back up to get into the threes after a stagnant month. Employment, just over 1.166 million people. It's a 1.89% increase year over year, and we gained 1,700 jobs in the previous month. So to see increasing employment and jobs gained is always good for real estate, to see a population that is growing and not declining, because that's some of the worst things that can hurt real estate prices. Is when people are leaving, that means people aren't buying houses. And when people aren't buying houses, that means prices are dropping. So it's good to see steady increases in the employment. Unemployment here in San Antonio area was 3.21, which is a 0.12 decrease in the previous month. Holding steady, holding good and strong. We're sitting below the national average and below the Texas average, I do believe. So that is fantastic to see that we have such a low unemployment here in the San Antonio area. Now, the month's inventory for October was 3.42. This is higher than it was previously, but from the previous month. But remember, that is seasonal. It's typical this time of year to see days on market for realtors and then for investors to see the month's inventory starting to creep up a little bit, because we were at 0.36% a month increase from the previous month. Nothing I'm really too worried about is, if you guys remember or if you're hearing it for the first time, the balanced market between buyer and seller, the supply and demand they call it, is 6 months inventory. And what that really means is if no new housing got put on the market and the same rate of consumption and property sold continued for the next 6 months, we would consume everything on the market, and they consider that kind of your balanced market. And so anything below that, the lower the number goes, the more of a seller market than there is a buyer market, meaning there is more demand than there is supply. So this tends to push up prices over time, because that means things are a little more competitive and people are kind of bidding those prices up because there's not enough supply for the demand. Median sales price over time. Finding a little bit of a cold the last couple days. So what you're really looking at here is our real estate trends over time. So this is right when we came out of the last recession, and this is really pretty much the last, since it's right around 2011 that it decreased. So we've been going up for quite some time, going on 9 years now. But what we're looking at is our selling season. So right in the summertime, that's when prices go up and then they drop. Just like when I was telling you in the previous slide, when that month's of inventory starts to decrease, the pricing can tend to decrease with a little bit, and this kind of really goes to show. So that's why I say I like to buy right around this bottom time, this November, December, January, February time frame, because that's when prices are lowest, because when I'm done with my rehabs, I'm getting them on the market right around here to catch that next buying season. I mean, sales go up, inventory drops, and prices increase all the same. So something to really kind of keep in mind when you're looking at this and when you're looking to really buy, and how long you're holding stuff on for if you're looking to sell those rental properties when you'd want to sell them. So right along with that, it's no surprise to see that rentals do the same exact thing. So one little tip that I always do we do for all of our rental properties is we structure them all to end on April 31st. Even if I'm going to rent it in the December 31st, I'm only giving them a 4-month lease or a 16-month lease, because I want that thing to end on April 31st. So if I got to get a tenant out, I'm getting them out right here, get my rehab done, clean up, I'm hitting that market for that next up market. So keep that in mind for rental properties of when you're actually looking to get them listed, or if you're looking to sell them, when you want to be selling those properties, because that would put you right around that time frame to get it on the market for the hot season. 20-year unemployment. This is why, if you've been watching some of my stuff over the last several years, I say I'm not concerned if we get a big jump of like 0.5% or 0.4% in the unemployment rate, because we're at historical lows. Last month or 2 months ago, we hit the lowest it had ever been, just over 2.5%. So I would be concerned, and if it does start happening, definitely tune back in so we can figure out what's going on in the market. If I saw months of unemployment increasing at 0.5% month over month over month, then I would be concerned, because you can see when this recession, the last recession started, how it went from a 3.64 and it got all the way up to 7.52 in a matter of a year. Not very long at all, but at real estate, it took 4 years for real estate to really bottom out. So that's why I want to keep up to date and watching this stuff. Year over year appreciation. Something I just started tracking a couple months ago is I want to see how fast real estate goes and what is the long-term trend and which direction is it heading. And you can see coming out of the recession how fast, right around that 2011 timeframe, how fast prices started going up, and it stayed at that 10% for quite some time, almost 4 years now, or 4 years, and then it kind of really started to taper off. We got a little bit lower lows, not as quite as high as highs, and we kind of see that kind of slow down. Now, and this kind of really shows that the total average over the time frame of June 2011 to October 19, the average has been 5.1%, but the 12-month average is sitting at 4.5%. Now, it's not to say not sounding an alarm, I'm not freaking out or fear-mongering or anything like that, that real estate is over. It's just not appreciating as fast. And what I think is really doing that is we've been going up for quite some time to see wage growth has not kept up with these types of price increases, especially during this time frame. And that's pretty typical when we come out of a recession. If you study economics, that some of the best times for investments is in when blood is in the streets, to pick up properties on the cheap, get into kind of stock markets, other investments, because liquidity is drying up and prices can start to rise fairly quickly. And I mean, the stock market the last 10 years has been kind of the same ways. It really took off for several years, and now kind of is not quite getting as high as far as an average. But we are still hitting higher highs. It's just not going up quite as fast. So now the most popular part, I guess, is now where is to market. Now this is when you're marketing to try to find leads, to find houses, is where do you want to buy based on what I consider like your month's inventory, to where are your typical people buying, and where is the most likely price point to be buying and zip code for that kind of demand for the sales volume and the month's inventory. So I track it the two ways. First, by price range, because I want to see out of those 2,700 houses that are sold, where's the bulk of people buying? And the bulk of people buying are still buying in this 250 and under price point. I think a lot of this inventory is in this price point's really been pushed up into that 150, 200. Because for us in our business, for our renovations and flips and stuff, we love to try to stay under that $250,000 price point and really try to stay under that, because we know that that's the most in-demand area, and builders aren't building. They can't build at those prices unless they're way out in the county. So if I can get stuff, especially here in San Antonio, inside the 1604 loop at those price points, now I'm not saying every place is great at that, but if I can buy in that sub 250 market as far as the ARV goes, I'll buy them all day, especially if the rental properties that we can pick up that are going to have those values in that price point. Because we know the builders just can't compete with those price points anymore, with the price of land, material, and labor going up so drastically. So it's something to definitely keep in mind of where you are targeting to buy, because I know in these price points you don't have to do as high end as finish outs to get those values, because you're supplying what nowadays they say is like your starter home for your bulk of your buyers. Now I do it by zip code as well. So this I track it over a 2-year period, and I'll probably be getting pretty close to being able to do it over a 3-year period, so you can really kind of see what these low months of inventory really do to a price point over a certain time. And it's no surprise to see these months of inventory, to the majority of these being under that $250,000 price point. We only got about 3, this one just over 4 of them are in that over that 250 price point. So you can really kind of see what this kind of does to some areas. 78233 is a very large zip code, and you can see over the past 2 years from shouldn't say July. That should say, let's see, August. What the price point has really kind of jumped in that short period of time is you're looking at, what is it, $26,000 in just 2 years? That's a pretty good price increase in my mind. Same thing, now, but it isn't always a general case. You get in these higher price points, and it really kind of becomes more local because you kind of have some different types of pockets in there for your high-end homes to where prices have not fallen that far. Just the average home price in that zip code has dropped that far. So it might have been a couple $1 million homes that sold that pushed this price up this month. So it's something to kind of really look at and need to dive deeper into the data to see where those numbers come from. Now, the other side of that, where's the highest inventory? Now, it's not to say these are bad zip codes, but it's something I always say you really need to kind of look at it like, what is your competition? Because you can see the majority of these, no surprise, are in this higher price point, your 300,000-400,000. Oh, and I want to definitely mark it and kind of put out as well. This did not appreciate from 0 to 157,000 in 2 years. This is an older neighborhood, and literally this time in 2017, no houses sold, so there was no average. So I don't really have any data, but that is why you see a 0 in there. So don't go rush in there thinking it's the next hot thing just taking off. But going back to this month's inventory aspect of it, this is why you really need to pay attention, is because if you're in a hard money loan for a $400,000 ARV and you got a $300,000 loan, every month you write an interest check for $3,000-$4,000 is coming right out of your bottom line. So you really need to look at what is your competition in some of these zip codes and look at your go around and look at these houses. Take a realtor with you, or if you are a realtor, something I do is I walk in through these houses, look at the finish outs, the craftsmanship, the grades of finishes they're putting in them, and I need to say, okay, I need to compete better than that if that house is really staying on the market that long. Talking better kitchens, higher end finish outs, maybe hire an interior designer, landscaping, pictures, staging, all of those things that really help and push that thing at the end to give that thing that final touch that really puts you over the top. And I know it always sucks going in and spending extra money right there at the very end of the project when you're just ready for it to be done and be on the market, because a lot of these big houses take huge renovations. But you have to not go cheap on the finish outs and those final touches, because that's what's going to put you over the top and make your offer get in quicker, generally, if everything was done right and not be on the market for those 6 months. So that really kind of concludes this month's market update. If you are listening to this on our Investor Journey podcast, head over to YouTube and watch the video there so you can kind of see a lot of what this stuff means and put kind of visuals to numbers, what you're kind of hearing. And then you can also go to the PRYMEHomes.com and subscribe to the Investor's Digest, and you will get a link to the YouTube video every month and PDF copies of the slides so you can see and keep this stuff, and you can really kind of, like I said, put what I'm saying to a visual aspect of it, because it's very hard to understand when I speak a lot of these numbers what that really means. But if you can't see it in a graph in a drawn out fashion, it's hard to see. So if you are listening to this on YouTube or finding it some other way or through the email list, we do have a podcast called Investor's Journey Podcast. Please head over, check it out. We're getting raving reviews on it. John puts something together, puts a podcast every month, or every week, sometimes twice a week, about tips and tricks and things we're doing in our business and things that we're learning along our journey as investors. Everybody be safe on Halloween, and we will catch you guys next month.